This is very scary, and this pattern says it might be time to sell. At the same time, we have a $50 trillion problem. That's the US federal debt. The numbers just keep growing and growing and growing. Is Doge going to come and save us? Because right now, everything just seems to want to keep going higher and higher and higher, but not so fast because maybe it's time for stonks to go down. Why? Well, stocks have been getting whiplash ever since Trump's tariff plan started. Look where we started, look where we went, look where we are. We've gone a whole bunch of nowhere, but the market is whipsawing everywhere right now. So I think there's going to be a lot of focus on Jerome Powell this week when he gives testimony on both Tuesday and Wednesday. Please send good vibes and prayers. Why? Because the big Don's going to be watching. And his tariff discussion was supposed to be a way to potentially get interest rates down, not up. So let's pay attention because this week, honestly, there's a lot for us to go through. So again, send your good thoughts and prayers because on Tuesday and Wednesday, Jerome Powell will be giving testimony. We're also going to get core CPI and PPI on Thursday. This is what's interesting too. Great Britain's actually going to print a negative quarter. That would be the first of a potential recession. Interesting. We have a lot of earnings this week, and there's going to be no surprise, but the beat crew is here. They're mostly going to be beats. Does that mean stocks are going to close green? Well, for this last week, they didn't. We're closing here at 39 for fear, and we're going to get a breakout from this wedge at some point here. So this is really what this weekend's video is about, and I have a lot more things to walk through and show you, but at a high level right now, the U.S. debt is very high. It's $35.4 trillion. It's going to be as high as $50 trillion by 2035. Whoa. Wow. So these numbers here, again, $1.3 trillion on trade, may knock 1.2% off GDP, may add 0.7% to the core PCE. Something's going to have to give because right now there's a tit for tat between the country over in the East and the U.S. So this country retaliates against the U.S. starting on February 10th. Well, that's like tomorrow. Yes. And there's honestly a lot happening. What could be impacted? Pause the video if you want to see, but it's mostly cars, basically oil or petroleum up from Canada, and then phones, computers, and auto parts. He has a lot of priorities for tax and $4.7 trillion in tax cuts. Whoa. So we got a big problem. And right now, the average American has a much bigger problem. 63% of employees are unable to cover a $500 emergency expense. Typical Americans have about 40% of credit card debt, and these are because of emergencies. So they're adding to balances because of emergency expenses, including cars, medical bills, home repairs, and miscellaneous. So when it requires $24.16 per hour as a livable wage for a family of four, and right now you're making $7.25 as a federal minimum wage, that's like really low. And it's making it very difficult for a lot of people. This is what Ray Dalio calls how countries go broke. So a lot of focus will be on inflation this week, and really what Jerome Powell has to say. Is the stock market going to be the stink market? Well, the S&P was under pressure in 2018 when Jerome Powell was here. Again, they moved in lockstep. So is America still number one? Well, as of right now, U.S. exceptionalism trade is showing cracks. What does that mean? It's a little bit lonely at the top. Isn't it, America? That's right, a little bit lonely at the top. Here's a few more quick headlines just to get these out of the way. What is happening over in Ukraine with rare earths? And why does Trump want them? Why is he saying that they want to offer a deal? Well, let's look here to the very top of this article because what does it say here? NATO. NATO what? Energy security. For what? Rare earth minerals and clean technology nexus as the background of the certain thing happening in Ukraine right now. Very detailed document. I'll just leave it there because honestly, there's a lot to go through. Also saw a headline here from Elon Musk saying that he's not interested in buying TikTok anymore. Right? He's champing at the bit. Okay, cool. Well, then who's getting it? Because big old daddy Trump is saying that he's ordering the creation of a sovereign wealth fund with the potential to purchase TikTok. Interesting. So why is Elon Musk backing down? Because normally he doesn't back down. All right, here we go. SoftBank is set to invest $40 billion into OpenAI at a $260 billion market valuation. Whoa, that's huge. And as an AI effector from CNBC, tech mega caps plan to spend $300 billion in 2025 as AI race intensifies. Whoa. Here's another really big doozy because this really impacted Amazon this week. King Dollar emerges as fresh threat for big tech earnings ahead. Why? Well, the greenbacks climb 7%. That's like a tax for big tech stocks who sell around the world. That's right. For exporting, right? Export demand. We're also going to have a really big update here from Volkswagen, which is planning to launch I think it's an $18,000 car. It's a 16,000 euro 700 car, which is supposed to be cheap. A quality at the low price. There you go. Because BYD, ding, 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 they got a really big event happening on the 10th as well. All right, so the Trump pump might turn into the Trump dump, right? Gap downs are for buying. Well, every Friday we've had the same effect every week. What is that leading to? It's leading to that. It's leading to that exact pattern I'm pointing out right here, which is lower highs. So here we have a weekly candle, high, lower high, lower high. What does that mean? It means like basically every week we're gapping down, pumping up. Here, let me show the charts really faster because this is important. So if now we look here to QQQ, what do we have? High, lower high, lower high, below our previous all-time high. So even though we have hollow candles, which we've talked about before, and I got those notes for you right here. If you want to pause the video, I can show those to you right here. I will go through these at the end of the show. But I just want to make sure we get this out of the way here to understand what we're looking at. Okay, here we go. Where's the trading view? Trading view. Where are we? All right, let me pop out. Oh, here we go. So every Friday, right? No coincidence that, oh my God, we get the Trump slam. Boop, boop, boop. Last 3 Fridays, there's been a power slam. This is a bearish engulfing daily candle. It's here on QQQ. It's here on SPY. So this W is at risk. We can't really afford to mess around. We got to go up right now. And that might be an excellent time to consider smashing the thumbs up or subscribing to the channel. Thank you very much ahead of time. All right, so these are the quick updates right here. There's a risk of a sudden drop because of the 2 lower highs and a key rejection on the S&P when the Nasdaq's already a little bit soft. We can see our key areas here for the monthly. And as of right now, we still have our uptrend. But again, the risk of a sudden drop is very high. And with Jerome Powell speaking this week, I think he's going to have to try to make a very delicate balance between saying what he wants and saying what Big Daddy Trump wants. We're going to hide where we were last week. And we got through a lot already. That's right. Only early February, but man, we got through a lot. So as of right now, we're 1 out of 4 bullish, which means we have a failed breakdown. We talked about that briefly at the beginning. We're 39 into fear here. So we went from 45 to 39. That's showing we're actually losing progress here. There's an AI conference happening in France, and then BYD is going to be announcing apparently vehicle intelligence starting tomorrow at 6:30 a.m. Look for those headlines first thing. Then Powell Day 1, Powell Day 2. We got CPI, PPI retail sales, and then Valentine's Day on Friday. Are we going to see fade number 4? That's right. Every Friday we've seen that sell-off so far. Looking here to the heat map like we talked about, fairly red. If we try to clean the group up, mega caps are actually pretty mixed. Nvidia and Meta are higher. The rest are lower. Notably Apple on earnings. There we go. We'll skip that for now. Inflation is proving sticky as Fed Chair Powell heads to the Hill. So what's going to happen here? Is he going to say, we're going to be accommodative, we're still fighting the good fight? Because UK GDP is also due, and it looks like it might go negative. All right. Trump's second term may also require a new playbook for equity investors. We're going to talk about that later this week. Maybe you want to subscribe and get more updates. Pondering Trump trade puts wall between street risks fixated on test. There you go. I probably misread that. Why? Well, I'm trying to push forward fast. Here we go. Next week, people are perfectly tied. This doesn't happen often. Roughly 1,000 people. Thank you for voting. So where could we go? Well, the only thing that's for sure is that nothing is for sure. So there's this major event for major intelligence happening by BYD. But let's push forward to the other thing here. Every company is basically going to be Microsoft, Shop, Coca-Cola. I think there was one missing here. Supermicro not provided yet, but there were some notable beats, like 29 over 22. Like that's pretty good. Kraft barely beating. This one's really good. Look at Reddit. 41 EPS Whisper over 24. Oh, wow. That's excellent. Yes, that is excellent. Every company here's a beat. All right. All right. Then the BYD event, like we talked about, I'm just talking about this because I think people are going to be pretty impressed. Here's the tagline for their event. Technology is made for people and everyone should benefit. Whoa. Nice. So what's Powell thinking right now? Well, big old Powell's going to tell us. So if you want to find out more and see what I do after I sign off, you can come join me at theelgo.com. Thanks so much for tuning in.